Morning all. How are we all doing? Morning ladder, Adrian, BJ. Was there any news on silver yesterday? Was not on the charts. Look at that move. I was just looking at gold actually, funnily enough. Yeah. Big move up on gold as well. Not quite sure why. I never know. Commodities, gold and silver, metals and stuff, they have a life of their own. It is just transactional, I think. With where's my pen gone? It's doing all over there. It is just transactional, I think. It's either with these, it's either caused by the US dollar moving fast, or it's caused by a large purchase in gold. So a central government just purchasing or bank just purchasing large gold reserves, which affects the price, I think. But this is why I don't trade it, because you get these crazy moves. When you're position trading, if you get into it just as one of these things happen, it really gets you into drawdown fast. And it's got a big old ADR on it. Gold 300 ADR. It's always got a big ADR. Yeah, I don't know. Don't know what that was. Was that around the time of PMI? 5, so it's 3 o'clock. Yeah, that's when PMI figures were released. Yesterday. So that was something to do with that. But I don't know how you link the two, but anyway. Morning, Jane, Diamond, Jeff, Stevie. Oil up to, yeah, over 83 now. Approaching the 24. I know. I took a long on gold yesterday. Oil yesterday. I didn't tell anybody. It's secret. I just got out of it this morning, actually. I took a few, actually. I got in down there and I scaled in. It's a move yesterday. I scaled in yesterday. I had a feeling gold. I think it's going now. I didn't post it in the group because it was just an impulse scalp, and I wasn't sure if it was going to work, but it did. I've still got one on actually there, which I'm just going to close. Or shall I close it? Actually, I might leave it running. It's got a stop on it anyway. But yeah, it's. I think oil's off now. I think we've got with the news from OPEC about the oil production cuts and the OPEC meeting coming on Wednesday, which is when they're going to confirm it all. I think we should get some bullish movement on gold and on oil, but I'm still, it doesn't really seem to matter with oil what happens from a fundamental perspective that you would normally expect price to rise from, i.e. a lack of supply, increased demand. You would expect oil prices to rise on that. It doesn't seem to be having any effect, regardless of what they say. We're going to cut 1 million barrels a day in production. That will drive up oil prices because there'll be less of it around and demand is not changing. So you would expect it to drive prices up, which is what's kind of happening off of this OPEC news. But I just don't know that it's actually going to work. I don't know. Oil just seems to be very erratic at the minute. But this is a key point. So you need to make a decision on oil. Whether we're going to continue in this trend from here or not. I don't really know, to be honest. If it gets down to here, I will definitely be buying it as a long-term swing. But I'm not sure we're going to get there. I don't know. Anyway, bit of mystery oil. Yeah, and obviously gold, we had a sharp incline on gold yesterday. Back up into the sell zone. Assuming we're going to get continuation strength on the dollar. Morning, Themba. But yeah, anyway. Pound I got out. I had a little pound yen on short. I got out of it yesterday. This thing's like a steam train at the moment. I've no idea what's going on with the pound, to be honest. And the yen is just gone uber weak again, suddenly this morning. So confusing times. Pound's having a bit of a rest against most things, hopefully today. We've had a massive push up. And we had the main news overnight was the Aussie. It's just dropped down to 4 hours, so we can see. It's dropped down lower than that. The Aussie, we had the rate announcement overnight. Let's have a quick look at the news while we're getting to anything. They didn't go with their forecast. This is the first country that hasn't done the forecast. So they were forecast 0.5%, which is the norm. They didn't do it. They went by 0.25, 0.25%. So worse than expected interest rates. So this is weird because I'm not sure what the inflation figures are for the Australian dollar or for the Aussies. But a lower than forecast interest rate increase would indicate that their inflation figures are not as bad as expected, which is fine if that is the case. But everybody else's inflation figures in the world is going through the roof, and they're not putting their rates up fast enough. So the Aussie have completely gone the opposite direction. So it'd be interesting to see what the New Zealand dollar does tomorrow. If they go to 3.25, it would indicate that inflation in the Asian sector isn't as bad as the rest of the world, which from what's coming out of China, I would suggest is probably not right. But anyway, Aussie had a big collapse overnight on that and has recovered the entire thing this morning. So read what you will into that. This looks like it looks to me like it wants to be a strong Aussie dollar off the back of lower than expected interest rate rise, which is meant to be negative for the country. So, whoa, what the hell? But anyway, if that is the anticipated direction of the Aussie, which is what I would expect it to be, this movement, this correction that we're seeing this morning, is likely just a liquidity run. Obviously, what the banks did overnight is drop the currency short. Big spike down. Everybody's gone short on it. Everybody's liquidity is sitting up at the highs. That's now been taken this morning. So if that is the move that they are doing, we want to get in short up here. So watching this Aussie New Zealand likers along, so that had a nice little pullback potential entry, but obviously I wasn't here, I was asleep. Aussie yen liquidity taken at the highs. Aussie Swiss just taken the liquidity at yesterday's high. Aussie CAD didn't quite get there. So everything's taking the liquidity. So this could well be a lovely shorting opportunity on these. Probably US dollar's the best one to get into, but none of these are extended at all. Aussie Swiss was. Aussie CAD, looking at the hourlies. Aussie Swiss obviously was. So the Aussie yen, I think that would be a lovely opportunity to get in short, but I don't know what's going on with this yen. It seems to be weakening again this morning. So it's all over the place. But Aussie US, I would say, is probably your best bet. That's the only one that isn't extended on the hourlies. What about the 14? Yeah, see nothing extended at all. So that looks like a pretty good short opportunity. Aussie US. I like the look of that. US dollar strength. No reason why we shouldn't get continued US dollar strength. And I just don't see this Australian dollar news being positive. It should be negative. So I think these are fake moves that we're seeing this morning, but time will tell. Let's have a quick look at any other overnight. Yeah, so they said they're going to raise interest rates in the coming months, but they've only done 0.25% this time. is dedicated to gradually returning inflation to 2 to 3% range. So they are admitting they're above their inflation targets, which is confusing times at the minute. I quite like that's a short. So I'm going to get on Aussie US, I think. Oh. I'm a bit slow this morning. Shorts. Okay, so actually, are we going to get an alert? Yeah, I'll just take the first alert short there. Should I take one there? That's the obvious spot to get in. It's not a reversal alert, but price action is certainly bearish on that there. I might just wait. Because if we push up, we're going to get the, if we can do an M pattern here, we're going to get a nice tight entry there. So I'm just going to wait and let the EA get me into that short. Yeah, Aussie US. So ADRs this morning. Let's just whiz through the news quickly. So yeah, we've had the rate announcement. We've got Mester speaking a bit later on. We've got Jolts this afternoon, which doesn't tend to do an awful lot. It does do a little bit of a spike quite often, but doesn't do much strong movement-wise. It continues. We've got Lagarde speaking later on. And then tomorrow morning is the main thing, which is the New Zealand rate. So it'll be very interesting to see if they follow suit with the Aussies, because usually they're running in parallel with each other. So we will see what their decision is. But today we've just got Jolts this afternoon at 3 o'clock. So there's no other major news apart from that Aussie rate announcement. Overnight stuff, not a great deal. Korea shot a missile off over to Japan. Love it. More mumblings coming out of Japan, but nothing particularly exciting. It's possible that North Korea could engage in further aggressive behaviour, including a nuclear test. Well, that's gone nuts. So we had CPI as well overnight from Japan. CPI figures came out as forecast. So their inflation figures are exactly what they were expecting them to be. So it's interesting that they're not doing massively bad with their inflation, not any worse or better than any other. But they're not really putting anything in place to get over the top of it at the moment. So we'll see with Japan. Really don't know what that intervention is that they're planning, but we'll hopefully hear soon. So that's the news. Aussies, obviously we know. So Aussie CAD is an ADR hit this morning. So that was down to the lows. Very hard to get into because the push was so hard on the news. But if you'd have got into that, that would have worked out very nicely. Aussie New Zealand, we've just had the reverse alert on that one as well. I like the Aussie New Zealanders along, but I'm going to wait. I wouldn't. This is kind of looking like a nice accumulation ready for the next leg. Remember I said, when we get these pushes away from the moving average, we tend to either go into an accumulation, wait for the moving average to catch up, which then pushes it higher, or we get that pullback to the moving average and then sort of a market structure move to the upside. This is basically an accumulation, wait for the moving average to catch up. So tomorrow morning, we could get some decent movement. If it's negative news on the Aussie, on the New Zealand, and the Aussie, I mean, the Aussie was negative as well, as far as I'm concerned, but they'll still be stronger. So we should get a continuation move to the upside, but I'm not going to jump into that ahead of a massive rate announcement from New Zealand dollar, but looking like it's getting ready for the next leg up. Good morning, David. So those are the only ADRs you've got. Weeklies, we've got loads of weekly hits already. So I'm going to quickly run through those because it is only Tuesday and we've got like 150 ADR moves or average weekly range moves on things, which is obviously not the norm. The thing you've got to remember with this as well at the moment, with the ADR and the weeklies, these figures for ADR are slightly out on some of these instruments, mainly on the pound. The pound's weekly and average and daily ranges are going to be a lot bigger than normal at the moment. Look at the pound yen and the pound New Zealand. We're back up to 390 ADR. It's not. That is just because of that massive idiot spike from the government. So they're not really these levels. They're just inflated, and they will stay inflated for 2 weeks, 10 days, because we're using ADR 10. So your figures are going to be out for around about 10 days. The rest of them aren't particularly skewed. So New Zealand dollar Swiss and some of these others that have got up to 125s, 150s already, they could be reaches for reversals coming up. So we'll have a look at all of those this morning as well. Aussie dollar Swiss. 174 to the upside already. So Aussie dollar Swiss already hit its weekly range extension yesterday. Massive move. So difficulty with this one is what's going on with the Aussie off the back of that rate. I would usually say that was negative, but at the moment, obviously, we've just taken out these highs. So this looks like a good opportunity for a short. We've just tapped straight into the 24. Very similar move to this. This was the Swiss franc rate announcement. Yeah, we had a negative move and then it went positive. With this one, we've had the Swissy pushing up, or rather the Aussie pushing up into its news, and then potentially we're going to get that sort of movement. So it's the opposite of what we would expect to be happening, which is what seems to be happening a lot of time at the moment. So good looking opportunity for short on that one, as we just looked at. They've just taken out yesterday's highs of liquidity, so they've driven the price down. Everybody's gone short during Asia. Stops above the swing high, take out the swing high and drop. So looks pretty good. Aussie dollar Swiss. CAD Swiss, same thing. Big strong moves. We've got a very weak Swiss franc at the moment. Again, no real reason for that at all. There's nothing that's come out that said, the Swiss franc should be particularly weak. So again, very odd move to the upside. Everything's taken advantage of the Swissy. We had the Aussie dollar, obviously, which pushed yesterday as well. So that was a big move. But we've got this high coming up here. We're pushing straight back up into the 24. That's an absolutely parabolic move. As you can see, it's taken the 4-hour RSI literally from extended to the downside to extended to the upside in a day. So very, very big parabolic move. Not quite sure exactly what is driving that. Obviously, the Canadian dollar has got some strength off the back of that little bit of oil run we've had. And we've had a weak Swiss franc. So there's a lot of money moving around in the market at the moment into different currencies, but usually it's just manipulation. So would expect a continuation short. I kind of like the CAD long at the moment with the US dollar. And I also like the Swiss franc long. So this is a long bias, but I like where that's positioned at the moment. So it looks good for reversal out, which you're just about to get. Might actually try that one. Just have a quick look at the Euro Swiss as well. Much prefer that. Euro Swiss hasn't hit its weekly, but from from a RSI perspective, I would much rather take a Euro Swiss short than I would a CAD Swiss short. So either of those really look good. So CAD Swiss you could take from there, and Euro Swiss is obviously a very good opportunity to get in as well. Very nicely extended. I'm going to jump on Euro Swiss, I think. Just about to get a reverse alert on that one as well. Morning, Andy. What's going on? Sorry, my phone's getting mental. We'll just check what it is. Somebody messaged me on Facebook. Euro Swiss. Why is auto trading turned off? Sorry, one sec. Auto trading back on these. Okay, so that'll get me in that next reversal there. So Euro Swiss, like the look of that as a short. It's not extended on the weekly ranges, but is massively extended on the 4 hour. Again, when you're seeing opportunities to get in, always have a look at the other pairs, other opportunities, because if you've got one RSI extension on something, on 4 hourly, whatever it is, there's a good chance you'll have others. So we know that there's a weak Swiss franc at the moment, so we've got a Swiss franc extension on the CAD Swiss. So before I jump into that, because it's a good opportunity to get in short, I'm going to have a look at all the other Swissies, because there may be another Swissy that I prefer, which is what has happened in this case. I don't like it because of the ADR or the weekly range extension, but I do like it because it's more extended on the 4 hour. The pound Swiss as well would be another opportunity that you could take. Pound Swiss, very nicely extended. Looking for downside movement. The pound, what is going on with our government at the moment? I have no idea. But we've just reversed part of our decision from last week. The market has completely recovered that loss. But the government still hasn't got any plans moving forward for fiscal policy. It's said it's going to release it by the end of the month. It was going to do it by the end of November. Yesterday, Kwasi Kwarteng came out and said, actually, we'll do it by the end of this month, because I know the market's a bit upset with us, because we've basically said we're going to do all of this, but we've got no plans to pay for it. So there's still no plans to pay for it. We're not going to find out to the end of this month. So until the end of this month, as far as I'm concerned, we should be bearish on the pound. So this is massively extended at the moment to the upside, helped along by a weak Swiss franc. So there's another good opportunity to get in short. So Euro Swiss, Pound Swiss, all good opportunities to short at the moment. The other extension we got is Euro New Zealand. That's already played out. You missed that one. Pound Swiss, again, we just looked at. So that's extended. That's done its weekly range already as well. New Zealand dollar Swiss, again, very good opportunity for a short continuation, but we've got New Zealand dollar rate announcement tomorrow. So if that does power up the New Zealand, if they come out with a much bigger rate than expected or something, you don't really want to be getting into a position trade ahead of a large fundamental news event. So that's probably not the best one to take. It is the most extended, but you are taking a trade into news. Yes, you could make an absolute fortune out of it very, very fast, but you could also go into drawdown very quick. And if this is a positive for the New Zealand dollar, you could get that sort of movement. You're going to find it very difficult to get out. So I'd leave that one. New Zealand dollar yen extended to the upside. Don't know what's going on with the yen. I like this, but again, not ahead of fundamentals. Again, that's nicely extended, but and US dollar CAD extended to the downside. So we've done our weekly range on that one, 260 pips, 250 pips to the downside already. But again, I like this long. I'm looking for that sort of movement on this one. But obviously, weekly range, Pound Swiss just done 125 of its weekly range now. But yeah, so we just had a reversal out on that one. So potentially we could get a retest and drop. I'll be looking to buy it out of there. So yeah, so there's a few opportunities in there. I've taken a couple of those. Your 4 hours CAD Swiss. Just look at this one. Obviously, that's just turning over, just rolling over now. You'll just about get an alert on that in a second. It's not the most extended out there at the minute, but that is a massive parabolic move. So I would expect at least a retest of that level. if not all the way back down to there. But I think there's every opportunity this could just come crashing down. Don't forget this move on the CAD and all of the oil producing and commodities based pairs, the Aussies, the New Zealands, etc., all had a good day yesterday on OPEC's announcement because it benefits all those countries. But as we've seen from oil, it doesn't matter what you say to oil. Regardless, oil seems to be coming down at the moment. So whether this is going to be the stabilizing event for oil or not, I don't know. But even so, oil isn't the only thing that drives a currency. So, this CAD Swiss is so extended, at least a good scalp opportunity. Look at where you need to come down to on the, where this move started from. I would say 4 hours is probably the best propulsion gap to look at. But the break of the high was there. So anywhere back down to retest there is a potential target if it's going to pull back and push. If it's just going to collapse, obviously, and make a new low, then it doesn't matter, does it? But there's loads of room there. You've got 24 pip if you're going to use a stop on it, and you've got potential of 80 reward. So it's 4-to-1 risk reward trade going short. So it's a pretty good opportunity to get in short on that one. Euro Swiss, that's the one I'm just going to get into. So I like that short. Obviously, it's a lovely big short. We have got up to the 72 a few times and poked our head above. So there is potential for this to move further, but we are pretty extended. So, every time we get extended on Euro Swiss, the Swissy has batted the euro back down again. It will do at some point. It's the banking sector, basically, in Europe. And we know the euro isn't particularly strong based off of its rate announcement. The market wasn't particularly interested in it. So even if it was to be strong, the euro Swiss should give us a nice push pull because the Swiss franc will power up and just basically move the currency either way. So it's a good one to get into, Euro Swiss. Not a bad ADR on that either at the moment, 130. So it's moving quite nicely. So yeah, like that as a short. So I'm in that one. Pound odd. Again, like it as a short. Off the Australian news, obviously we haven't had much, as you can see. The Aussie news hasn't affected this one particularly because it's a weak movement we had off the Aussie, and we've got a weak pound, so it hasn't really taken any advantage of it. But where we are at the moment, we're just coming up into a nice area of balance. We've got all these areas of chop here, which potentially are going to act as resistance. It's very, very, very difficult to forecast what is going on with the pound when you've had something this bad happen, where we've had to have bank intervention to solve the problem, creating exponential debt for the government. You've got to say, until they come out with some kind of plan for this, that the market isn't going to be particularly interested in investing in the pound. And when they do come out with those plans, if they're not particularly interesting for the market, it's just going to be negative. So I can't see this being bullish, the pound. The Australian dollar is obviously very weak as well at the moment. So it's really a battle of the weak currencies with this. And, we've got to kind of ignore this whole move at the moment, because all this was central government cock up, bank intervention to repair it. So we're back to basically where we were, and we've just pushed up and made a new high. So we first time pushing ourselves up above the 72. That's just momentum off the back of this correction, basically. So nicely extended. We should be looking for a continuation to the downside. So that's another good opportunity to get in short on that one as well. Pound Swiss, same thing. Again, just don't know 100% what's happening with these pounds at the moment, but nothing's changed fundamentally with the pound. We're still in the same situation, if not in a worse situation, because we've got a new government and a new chancellor that seems to be completely out of kilter with what we need in this country. So there's talk of lots of government cutbacks. So they're going to cut government spending to the NHS, to schools, to services. That's the only way they can save this money, because they've cut all the taxes. They're not getting the income there, so they've got to cut the spending. Cutting the spending means everybody basically in those sectors doesn't get pay rises. Pay rises equals strikes. Strikes equals upsets, etc., etc. It's that big knock-on effect. So, yeah, basically, we should get continuation shorts on the pound. Pound yen. Very difficult to tell what's going on with the pound yen at the moment. We are very nicely extended. I would love to say this is a short, but the bank intervention from Japan doesn't seem to have done an awful lot to the rest of the yens. In fact, this morning and yesterday, we seem to have a fairly weak yen. So again, the yen, I was ready to jump in short on it here. And I was waiting to see what the market made of that intervention. And the market doesn't seem to be particularly impressed with what's happened after that intervention. So at the moment, we're pulling back. So I really do want to be like that on all these yen pairs and taking shorts. The pound yen is probably one of the better to take, obviously, and the euro yen, because they're fairly weak at the moment. But then again, so is the Aussie and the New Zealand. So you can kind of pick any of these yen pairs to go short on at the moment. But you have to think what is going to be happening with this yen. We don't seem to be getting any further information out of Japan as to what their fiscal policy is going to be, very much like the pound at the moment. So the market's just kind of unsure. But that intervention that they've done will be sustained in some shape or form, either to keep the currency stable or to power it up. I don't think we're going to get a weak yen moving forward. So I think shorting yens is probably the best opportunity at the moment, the best thing to do. So the pound yen at the moment, obviously, we've got a very nice extension there. Ignoring that, if you'd have taken the extension up here and scaled in, obviously we got that move down. We had a nice move back down from there. We're very nicely extended at the moment. We could push up and come and challenge these highs. It all depends what happens with the pound. You know, at the moment, it just seems to be that when central bank and government open their mouth in any shape or form, the market is just reacting so quickly. So you could easily be up at ADR today. So if you were to get in on the next reversal alert here, which is unlikely to be that soon, you know, as I say, because obviously it's a fairly strong push up. So if you were to get in on that one there, your next stop is going to be either up at those highs there or there. So this is a resistive area, which we had a little price discovery out of and then decided we didn't like it. So we're either going to get a reaction there or there. So if you get in here, you only got one ADR, move to the upside before you're going to get a strong pullback, because we've had no profit taking on this move so far. We've had an accumulation break there. So likely if we get up to there, we're going to come back down and target this area here. So looks good, pound yen. And pound New Zealand as well. I don't really want to taking this one ahead of tomorrow's news is probably not the best idea. It's a real messy pair at the moment. So you can see we're just kind of sideways, more of a bearish stance on it. But it's a very weak against a very weak. So it's difficult to know which way this is going to go. It's going to be driven by the New Zealand dollar. If we get bullish rates on the New Zealand dollar, obviously we're going to get that coming down. If we get bearish, we're going to go up. So take your pick on it. We are extended to the upside, but there's much better pound pairs to take, I think, than the pound New Zealand. Being the weaker of the ones that I'd be looking to take. So that's the 4 hours. The hourlies and is that 21s? Yeah. So the hourlies, we've got the same sort of thing. We've got CAD Swiss extended on the hourly. Oops. just rolling over at the moment. So we've got very nicely extended from kind of this area here. You would have had a reversal alert yesterday, late in the day, somewhere in this chop here. In fact, you had one there. I didn't. You had one. You just about got an alert there yesterday in New York, and then obviously it just pushed up and accumulated. They've just taken out yesterday's high this morning. Nice M pattern reversal. And if we break those Asian lows, look out below today. So that looks like a nice looking short on the CAD Swiss. Very nicely extended on the hourly and embedded. I love this divergence as well. On the other side, so nice and bearish divergence. We've also got another level coming up on the hourly, potentially where we're going to get some kind of, in fact, we have just reacted at that area. So this whole zone here, this accumulation, got liquidity run there, retest of support term resistance twice. This whole area here is resistive. You see how many hours we had yesterday. Literally the whole of yesterday, we just pushed up. We didn't stop. So that move kind of started. The break was there. So somewhere around ADR to the downside is where I would expect us to come back down and retest. Assuming, of course, this is not just a bounce and continuation short. So it's either going to come down and bounce off, or we're just going to carry on. But again, oil will probably play a part in that. We've got OPEC tomorrow. It's all day basically. We've got OPEC meetings, so just got to be careful with those as well tomorrow. So yeah, good moves on CAD Swiss. Good short opportunity on the hourly. CAD Yen. Again, same thing. Massively extended on the hourly. We're saying not massively extended. We are extended on the hourly. Nice tweezer tops just going in at the moment, and we're in a nice propulsion gap here. So this move down obviously is where we broke that low. So we've got the propulsion gap come in, we pushed up into that wick, the wick test there, and continued to the downside. Then we went into 1, 2, 3, 4, 5, 6, 7 days of consolidation. We had a wick off spring as well, for any of you wick off people. Just with the spread, that's a spring. I'd say it's probably a spring of that low rather than taking the low there, because that was a move off news. So yeah, that's a spring. So what we should be doing now is coming up and accumulating at the highs with a triangle and pushing. But we've got a massive downside momentum here, which is going to start to push this back down again. So looking at it on the long term, it's really dependent on what happens with this yen, but this is where I'd expect it to go from if it's going to. Weekly range just hit on the euro pound. So euro coming down. Was that pound strength we got coming through? Looks like pound, yeah, got massive pound strength this morning. Yeah. So yeah, CAD yen, good opportunity on the hourlies, but difficult because of the yen. So I think we'll probably get a pullback on it, but you may only get pullbacks down to support, which we've actually have already tested. So it's difficult to know whether or not the yen is going to power up. And obviously the CAD is very strong at the moment, so not the best one to take at the moment, I don't think. Pound Swiss, pound pushing hard again still. We're extended and embedded. We have been since kind of here. So, you know, this pound correction for the last 2 days has been very, very, very strong. So we'll see if this one can continue. It's only just extended on the hourly. Again, good example here of these ones, that the pound Swiss and the pound yen are just extended on the 21. When you flick over to look at the 14, which is the one I was retesting, oh, they are still only extended on that. Only just. but they will be signaling higher extensions. So we're going up to 75 on this candle close on the 14. So see, there's not a massive amount of difference. See what I mean? When I was talking about that testing of the just stay, the difference isn't, to me, big enough to warrant getting in earlier, because you're just going to get into squeezes for a little bit longer, I find. So, but I am monitoring this 14 as well, just to see what sort of impact it has. But yeah, extended there. You can see CAD Swiss on the 14 RSI got extended even further. So on the 14, we got up to a 90 extension. And the 90 extension there was obviously where we started to turn. Yeah. And reversal started. So, but yeah, so lots of opportunities to get into positions today. As I said, I'm taking the Euro Swiss short, just about to get into that by the looks of things. Just about to get the reversal out on that one. And I've got the Aussie US. So I might take one on that. What was it? 0.5. I just really like this at the moment where we are, just because of the fact that we've taken out these highs here. We've got that low there, and we've got that low there at the moment. So we've got all this resistance coming up here, which is going to be at the 24. So there is a little bit of support which may turn to resistance at 125 ADR. So if this thing continues to push up to there, I'll be getting into another position there. But I like it where it is at the moment, based off of the weekly extension that we've gone so far and so hard. I don't know. It's a lovely M pattern forming here. It's just the fact that move's been so fast. I really like that formation. I'll tell you what I'm going to do. I'm going to stick my trade under these lows here. So basically, if we take out the London low, I'm going to get into first position on that one. And then if it doesn't take that out, we're going to push up. And in which case then the support rectangle is going to jump, and that will get me in tight up there anyway with the EA. So, well, dating sites back, look. Every day, every single day now, isn't it? They won't leave us alone. Oh God, what's going on in Russia? This is the right time to take on some extra borrowing. Upper House approves law to incorporate Ukraine's Donetsk region into Russia. Okay, so basically, the Upper House, which I presume is their government type thing, like our House of Lords or whatever, has made that legal in Russia. So it's legal in Russia to own parts of Ukraine now. You couldn't start a war on a more ludicrous premise, could you? So yeah, so basically now, if you are in Ukraine and you are Ukrainian in those areas, you are trespassing on Russian territory. So in theory, you could become a terrorist because you live in those areas of Ukraine. Crazy, but true. So yeah, that means, I guess, that they can now assume that Ukraine is now invading Russia, which would, in their eyes, allow them to step up their assault because they're being invaded. How to flip the cards in your favour. So yeah, so that's what I'm getting into today. Lots of opportunities out there all over the place on various different things. Nice pullbacks going on at the moment, so take your pick. DAX. Haven't looked at the indices yet. I'm going to cover those in a sec. Wrong time frame there. Big push up on the DAX. I was looking for a short opportunity to get this gap fill this morning, but indices yesterday had a gap this morning. We had a big up day yesterday across the board on the indices. I didn't trade the DAX yesterday because it was shut. Well, it wasn't shut, obviously, but morning pot Gaita. Yeah, we've had that big up day. So we've got this at the moment, this big up day, and we've had 2 inside bars. This is the 3rd inside bar on this up day now. So we were in an accumulation. We've just broken out of that quite substantially with a gap. So if we can get that gap fill done today, if they come back down to here, I'd be interested in taking longs down there. I've been looking for this pullback to start for quite a few days now on the indices, and today it looks like they've done it in style with this gap. So up days, bullish engulfings across the board on the US indices. We've got outside bars, so very strong move yesterday. Continuation to the upside is quite possible now for quite a few days. So I'm looking for long opportunities. I'd kind of like to short that 3-bar reversal there. I might try that. I shouldn't really take scalps on this account. I'm just going to use 0.25%, it's just a fairly small one. And just going to look for that break of that low here. So we've got a 3-bar reversal there, and now we're just inside this bar. So what I'm looking for is a break of this bar to the downside, start momentum to come down and get this gap fill done. If we can get this gap fill done today, then I'll reverse and go long. But we'll see. So I like it long. I like the indices long. I also like gap fills to be done before they run off with it. So I think today we've got a good chance of getting this gap fill done. If not, obviously we're just going to go straight off to the upside and I won't get filled on that anyway. So, but yeah, looking good. So pullbacks all over the place at the moment, potentially on the indices. And if you look at where what we've just done yesterday, we have just taken out these lows and the market has basically rejected those lows. So it looks like this is where the pullback is going to start. Now, the next question is, how big is the pullback? Are we going to pull back to 24.72 or are we going to pull back above as we have in the past? That is the question. So going to be tricky, but kind of going with a long bias for the next few days on these. So I'm just looking for longs after this gap fill's done on the DAX. If the gap fill gets done on the DAX, if it doesn't, then obviously I'll be looking long in New York on the Dow. Yeah, very interesting indices. It's taken a lot longer than I thought it was going to take. We've had a lot of turbulence, obviously, over the last week. So not really surprised, to be honest, but I think we've got a good opportunity for a big pullback now. So if you measure the moves we've had on these sorts of moves and pullbacks, moves and pullbacks, moves and pullbacks, moves. We had a big one there. This is the biggest kind of downward move we've had. We had a little bit of a pullback in the middle of it, but this is the largest down move we've had on the indices since the bear market started. So you can see volatility is expanding as we're coming down. So there is a lot more room to the downside on this, but you never know how deep the pullback's going to be, obviously. So I'll be interested in shorts somewhere around there. So from a position trading perspective, when we get back into this area, I will probably start a position short. May get squeezed for a while on it, but I still think we've got more downside to go. This thing's not over yet. We've got plenty of room for the downside. as far as I'm concerned at the minute. So it's just a case of obviously we're going to get the bounce. So we'll see. Gold, I was just asked about. We obviously had a massive push up yesterday. I'm not quite sure why the push was, but I'd be looking for shorts. So reversal alert M15. Hourly's a little bit further away, but that'll be a break of the Asian low as well. Nice propulsion gaps to aim for to the downside, which are holding up nicely at the moment. But I have to say, gold, obviously based on US dollar continuation strength, we should be looking for next leg down. You know, things like that happen on gold, which is why I don't trade it, because it just goes crazy for no reason. So yeah, be interesting to see what happens with that. That's silver, isn't it? XAG. Yeah. Yeah, big even gaps yesterday. Look, massive move on that. Yeah, but same thing, you know. That's obviously, oh wow, that's really different, isn't it? A lot stronger. But yeah, I don't get involved with that at all. What's going on with our friend at Bitcoin? Still dying. Good. No volatility now. Look at the lead. Look at the volatility in this now. The ADR is down to below 8,000. Tiny little daily candles compared to what we're used to with our daily candles. These big old moves, consolidations, breaks. We've got no volatility in this thing at the moment. Completely lost interest, isn't it? Ethereum is a little bit more healthy, but market's not interested anymore. Right, anybody got anything else they want to have a look at? I'm not going to run through all the pairs today, because we did that yesterday. Lots of opportunities on ADRs, on the weekly ranges, and obviously on the 4-hour RSI extensions. What's going on with oil this morning? I'm out of that little oil. So I was just pulling back a little bit this morning in London, but I wouldn't be surprised to see an accumulation push. We got a target to aim for at yesterday's high. So if we are going to continue to be bullish, we want to be looking for making new highs on the days. So, but like I said, with this one, with oil, we've got that 4-day, that 5-day sort of accumulation here to get through, which is where we're kind of running into now. So if we can break through that, which would be an ADR push today, I think we're definitely off to the races on this one. But this is a real key area to get through. There's so much chop for this thing to get through. Whenever you're getting down, whenever you're reversing, any currency or any instruments reversing, just by the nature of coming out of a downtrend, you've got all of this to get through, all this chop, all this area where we've been constantly selling into. There's still people short in all of this area, longer term traders, which will be putting a lot of selling pressure on. So it's a lot harder to get through normally, unless there's a fundamental shift like we may get with OPEC tomorrow. So we will see. But yeah, I'm going to take those 2 positions today, and then we'll see where we go from there. But if nobody's got anything else to have a look at, I'm short on that now. There we go. Aussie US, I'm short. Euro Swiss, didn't get the reversal on that. Wow, that pulled off pretty quick, didn't it? Just waiting to get into Euro Swiss. Yeah, so if anybody's got anything else, let me know. But otherwise, I will leave you all there. And might do a little bit of scalping today. Don't like this price action on the DAX. Did you look at US dollar CAD? No, I didn't. I don't think so. Let's have a look. Yeah, I did briefly because we've hit the weekly on that. So we missed it. Well, we haven't missed it. US dollar CAD obviously has done its weekly range yesterday. So, and today. We basically hit the weekly range to the downside. Just taking out that liquidity down at the low. So if we get a break back above here, i.e. we get a reversal alert there, potentially we could just continue that long move. But I really want to see this get a little bit deeper. So I want to try and get into a position long on this, but I want this deeper than we are at the moment. It could well just accumulate up here, and it could obviously just push. But this is Canadian dollar strength, which is driving this down at the moment, and it's really going to be dependent on whether or not we get that continuation strength on oil. That will hopefully continue that move down on the CAD. But we've got non-farm payroll coming up on Friday, and quite often the US dollar will weaken into that as well, depending on obviously what the bias is. It will either strengthen into it or weaken into it to continue its move. So the fact that we've got US dollar strong at the moment, I suspect we might get a little bit more movement on this, the downside. But obviously weekly, we've done the 250 pips we normally do in a week already, and we're only on Tuesday. So that does not mean, we can't continue. But if we do get down to these sorts of areas, if we get an ADR hit and get down into this sort of accumulation there, that's probably where I'd be interested. By the time we get down there, we'll be extended on the hourly. We are just about to get extended on the hourly, actually. So, H1 M5 entry right now. If you look at it on the 5 minute, so that's the only thing that I would say about this. This is the support. This is where the liquidity is on everybody that's longed this in the last week. They're just taking that liquidity now. I'd want to see them break above there. So for me, although we are extended on the hourly, you'd normally take an M5 reverse alert on that. I would probably switch up to M15. If we get an M15 reversal alert, it means that we've closed back above support. That is a failed breakout, in which case then there's every chance they're going to run for the other side. So I like that as a long from where it is now, but I'd want to see an M15 reversal alert on it. And then obviously if you're, that's assuming you're getting in with a stop. If you're position trading it, getting in there is also fine. But, you just got to be prepared that we could well come back down and test these areas down here as well. So, first entry, second entry, third entry somewhere down there, and then a bounce. But yeah, I like it long. Definitely like it long, US dollar CAD. That's good. Dallas just signed up for that dating website. Oh, you're going to get bombarded with emails now. Chat69.xyz. How do I get the weekly indicator you have on the right? Weekly indicator. This is the ADR. This one, you mean? This is the ADR dashboard. Here we go again. See, how does that bot get back in? I just reported you. Hang on. Sorry. Go away, bot. This is the weekly ranges on. So this is the ADR dashboard. There's links in the description on YouTube to get all of this stuff if you want it. But this is basically the ADR dash. I expanded it to monitor weekly and monthly ranges as well. So if you hit a weekly range within a few days, any time before Wednesday, really hitting the weekly range means you've had a very, very strong move in one direction. If you've had a very strong move in one direction, usually you'll get a profit take move as the people that have sold that move hit the buy button to get out of their positions, which creates a buying frenzy and you get that profit take move back in the other direction. So if you're hitting these extended levels within the first few days of the week, they're really good, often opportunities for either pullbacks or reversals. So good scalping opportunities. Obviously, if you get these lighting up on a Thursday afternoon, less important because you've only really got the Friday to react on them. So, but yeah, that's what the weekly ranges are. Just shows you what how far the currency is in its current weekly range of the last 12 weeks. Last quarter, basically. What do I think of GU as a short? Right, well, I'm in GU short at the moment, still. So this is kind of a this was a speculative trade, which I took when we had this move. So I got in short when we started to drop here. I had ads to get into more positions. What happened was, obviously, we had that large move down, which got me into those extra positions. Before I could get out of them, we'd pulled back. So I was like, right, okay, well, a move of that magnitude and a cock up of that magnitude, we should get a continuation. What we've actually had is market confidence on the bank's move. So that's why I'm in it short, obviously, still. So got into another position up here, slightly larger size, because this is obviously the origin of that move. So I'm looking here for us to continue back to where we were going from when that collapse started, which is here. So continuation short. So yeah, I'm in short on it, but I've got slightly odd position sizing on it, because one was taken the EA, one was taken manually. Then I turned the EA off because I wasn't sure. I wanted to keep scaling into it, and I'm managing it manually. But yeah, I'm short. We need some US dollar strength to come through, and obviously, the pound. You've got these positions. I shouldn't have these on, because what we should be just moving down from there. Scrap this lot, because this was all a blip in the market. We are back to where we are now, so I'm kind of starting a position really with this weird drawdown that I shouldn't have, which are ads. So I've just got to stay in it. But you look at the speed of movement, what we normally would do in around about a week is that. What we did was collapse. So from where I am at the moment, to get back down to these positions, it's probably going to take 2 or 3 weeks. Assuming, obviously, we just have a normal continuation run on pound US dollar. But I don't know. Don't know what's going to happen. It's an odd instrument. All pounds are odd at the minute. Look at this. It's just we are all over the place on the pound. But my view on it is we're not any better now than we were when they caused this cock up. So we should be just continuing business as usual. So I'm shorting on it. But what I'm going to do with this particular position, because it's just a really odd position. So as soon as that position starts to get into profit, I'm going to start adding. So I'm going to add. I'm kind of, if you like, pretending that's my first and that's my second. I'm going to add as we get back down to what would be my break even, just to bring this up. And then I'm just going to get out of the position and just cancel it all off, because it's not right. MK, do you like swing trading more than scalping? Yeah, that's what I do. Watch the Boocamp. It's all on YouTube. I position trade swings. I do scalp as well. But I scalp to supplement my position trading income. Although I have to say, over the last 3 months, no, it's not strictly true, actually. Over the last 3 months, I made pretty much the same amount of money scalping as I did position trading. So I got into it, basically, it's Russia's fault. I got into position trading because Russia invaded Ukraine, so I stopped position trading. I got into scalping more. I used to scalp a lot, Just cancelling that pending on the DAX. Doesn't look like we're going for the gap. We're off. So that would be where I'd be interested today in shorts. If we can get up to there, we might find some sellers coming in. I'm not, whether they can push back down there, I don't know. We've just, this gap up this morning has done that gap fill. That one took 3 days. So difficult to tell, isn't it, at the minute? And that's what I was looking for this morning. That gap fill. That's not what we got. We're getting a push. So I suspect that's probably the best place to start looking for shorts this morning. 12,500 basically up to 12,600. Does the bootcamp help with scalping? No. Yes. Well, yes and no. Depends. Basically, the bootcamp, I cover ADR reversals as one of the strategies, but from a position trading perspective. So with ADR reversals like Aussie CAD, for example. So we got this morning, we got that ADR hit to the downside. So that's 100 ADR. That's 125 ADR. Yeah, so that's shown on the dash. Obviously, when you get down to these levels, you can scalp long because it's extended more than its average daily range. And these percentages here are the percentage of times that price would extend beyond these levels. So, when you deeper into ADR you get on a normal day without any fundamental news happening, the higher the probability of either a bounce or an accumulation becomes. So basically, if you get down to here, the idea is you drop down into M5 and you look for a reversal alert to scalp out of that average daily range. This is a really bad example because it's absolutely horrible, messy ADR, but Aussie New Zealand wasn't much cleaner, to be honest, because it was off a news, basically. It's a news spike. So basically, if you're familiar with Steve Malro, the reversal alert indicator signals M and W patterns, market structure shifts, and ADR is measurement of average daily range, which shows you when price is extended beyond normal levels, and at those levels you've got a high probability of a reversal or a pullback, which is a good scalping opportunity. So it kind of does help. But the way I teach to use ADR is not to get in with a stop. You can do, but to get in line with trend. So, for example, Aussie New Zealand is a long. Yeah. So if you get an ADR hit to the downside, get into a position long. If that ADR extension doesn't hold, get into a second position or a third position, and then scale out when that profit take move starts. But watch the bootcamp. You'll either find it useful or you won't. I don't know. I can't make that decision for you because I've no idea what your knowledge is like, how you trade, how you want to trade, where you are. Watch it. If you pick one thing out of it that improves you, job done. If you pick it all up and go, wow, this is the best thing since sliced bread, as a lot of people do, done. Anyway, I don't know. You don't need to buy any of the indicators. These are all the indicators that I created. They're all available on MQL5. You don't have to have them. You can do all of this manually. Just a lot more difficult. But again, don't know how many hours you've got to spend in front of the charts each day. Position trading, for me, the majority of my entries are taken off of H4. So I'm looking for H4 RSI extensions, and then I'm entering on lower time frames when we get extended conditions on high time frames. So in theory, you only really need to look at the charts 3 times a day to position trade. because you're only looking at 4-hour candle closes, and there's only 3 of those while you're awake, maybe 4, depends how long you stay up for in a day. When you get old, you don't. You're a beginner. Okay, well, yeah, go and watch it. If you're a beginner trader, you'll find some of it might be confusing, but there'll be a lot of stuff in there. I've been trading for 13 years, nearly 14. No, I have been trading for 14 years now. Yeah, basically the bootcamp is everything I've learned over those years, scrapped everything that didn't make sense, doesn't work logically, and kept everything that does. So if you look at it and you pick it up and you run with it from day one, you could save yourself a decade's worth of pain. I don't know. Everybody's got a different way of trading. Everybody sees things differently. So you might think this is all a load of nonsense, doesn't make any sense to you, in which case then yeah, go and find something else, because there's 1,000 ways to trade the market. They all work, but at the end of the day, it comes down to the ones that gel with you, the ones that will make you profitable. And only you will know that. You've just got to try it. You've got to try stuff. Stuff will stick or it won't. And there's no one size fits all in this industry, unfortunately. Wish there was. I'm thinking the bootcamp and the indicators should fine tune my indices trading. Yeah, definitely. The indices are very, very structured. Market structure, you know, in the indices, it's just the same as everything else. But the indices are more structured because they're made of lots of different instruments which are all trading market structure, and sectors which are trading market structure, and they work very, very, very well. Indices, lots of swings. Like here, you know, there's, you know, it's very, very easy to trade market structure on indexes. Works very, very, very well. But, you know, like I say, try it. That's what I say in the bootcamp. You know, you will either find a use for what I say, or you won't. There's no, you know, there's everything in that bootcamp course is all of my knowledge, and everything I didn't like thrown away, and everything I did like mashed together. So I got the moving averages from somebody. I got market structure from someone else. I got ADR from someone else. I got the RSI from the TDI, which I extracted out of the TDI. So I dissected the TDI, took it apart, ended up with this bit of it. So everything that I put together to make my whole system and strategy is tiny little bits of everybody else's stuff, which is the best way to do it. And if you take this bit of me and this bit of me and don't take that bit or any of this, fine, do it. If that works, it works. You know, everybody's got a different thing. But the thing you have to remember is that you've got no control over which way this thing's going. You've got no control over when this thing is going to move up and down. The only thing you've got control over is that. Literally, the only thing in your control is when you hit this button. And you will be wrong virtually all the time when you hit that button. And when you understand that when you hit that button, you have a 50-50 shot of getting your trade where you want it to be or not where you want it to be, you'll realize that what you shouldn't be doing is using a stop risk reward based strategy. You should be using the flow of the market up and down to extract some money from it. And that's what position trading is. As long as this thing does that, I'll make money. If this thing stops doing that, starts doing that, or that, or that, I can't make money. But as long as this thing moves up and down, I can make money. And that's the light bulb moment for me, and that's what I teach in the bootcamp. Nothing to do with the indicators. You can position trade with any indicator under the sun. You could position trade with price action if you want to. You don't have to use any indicators. It's a methodology. It's a different way of trading. Watched some interesting videos yesterday on algos trading the stock market. Showed how it changed from the importance of value to it now being purely price. Yeah, the trouble with algos is they change all the time. I've created loads of algos, and the trouble with algos is they stop working because all algos are based on mathematical models. God, it's back again. Relentless this morning. Maybe if I pinned its message, it would stop spamming the chat. Yeah, the trouble with algos is they work off of statistical modelling, and statistical modelling is based on historical fact, and historical fact has nothing to do with future price movement. So therefore, algos will work for a period of time as long as the market has that structure. But when that structure changes, yeah, your algos will be making an absolute killing there. How do you think they did there? And how do you think they're doing now? Shot to bits. It's just, you know, the short term, the bank algos, the quants that run in the banks, they are taking quarters of cents and stuff out the market on ridiculously fast movements on the futures markets. And there's lots of algos running in hedge funds and firms which will use statistical modeling to get you in and out, and they will make somewhere between 5 to 12% a month, a year rather. That's it. But yeah, that's just the way it works. It was quants and showed that some algos contained a special code to get their orders traded first. Well, there's a pecking order. So the market makers will always get their orders filled first regardless, because they provide liquidity to the market. So if you look in Jigsaw or any Jigsaw, actually, I don't think the others do it, but in Jigsaw, if you look at the futures market, you will see a queue, and your order will go, and you will be 124 in the queue to get your order filled at a price point. The market makers jump over everybody and they get filled first, because the CME give them preferential treatment because they provide the liquidity. So they get the preferential fill ahead of you, which is why it's impossible to quant trade like the banks do, because you are not able to jump the queue. That's just a fact of life, unfortunately. It's same thing about, you know, rich people will park on double yellow lines because it's cheap and convenient and easy to pay a $90 fine for an hour than walk to a machine to put a coin in. I don't know, that was a really bad analogy, wasn't it? But it's just one of those things, you just can't get away from it. That's just what happens. SEC are investigating unfair practices going on for a while. Yeah, well, the SEC make the rules on the fills. You know, the market makers are there. The market makers are there for a reason, and the reason is to make the market. If we didn't have the market makers, the market wouldn't move. You have to have a set of banks and institutions that have a large enough liquidity to pull to provide liquidity for the market. So when I hit that button there, that sell button, there has to be someone on the other side of it. 90% of the time, that will be a market maker filling my order for me. So all my broker is doing is farming my order out to the market makers, and I become one of 200,000 orders that get filled at that price with that market maker. And then that market maker, when he's exhausted his liquidity pool, moves the price up one. That's what their job is, to make that market move. If you look at, if I was to hit the sell button, I had to wait for you, Mr. ABC retail traders, to come along and hit the buy button, this thing wouldn't move. Wouldn't be enough of us to do it. So they get preferential treatment. That's just the way it is. But there's all sorts of ways and means of manipulating that, obviously, as a market maker and as a bank and as an institution. You know, 10 banks run the whole system. Those 10 banks obviously want to make money. If those 10 banks have to talk to each other and scratch each other's backs to do so, of course they're going to. Every time there's a rule change, there's another back scratching opportunity somewhere else. So there's always going to be a way to bend the rules, and the fines the SEC give out are never bigger than the money that they make. Yeah, so if I manipulate the market and make $90 billion in the process, and the SEC come on and slap a $45 billion fine on my ass, I've made $45 billion. Never going to stop. Never going to stop. Just the way it is. We've got to accept it. But anyway, that's more for futures trading and for high frequency trading with quants. That's not what we do. What I took away from it, there's only a tiny percentage of people who know what really goes on in the market. Yes, absolutely. You know, and all this manipulation, you know, we've seen on the pound. There's a very small amount of people that understand why that happened, and a very small amount of people that understand why that happened. You know, you see interviews on the news where there was an interview on the news the other day when the collapse happened on the pound. They were talking to IG, one of the leading strategists for IG, you know, IG, the broker, who are also an investment house and everything. They do all sorts of stuff, IG. But you know, they were talking to their analyst and, you know, saying, you know, what do you think is going to happen next? He ain't got a clue. It's not down to him. It's down to the banks and what they decide to do. If the banks decide to release another X into the market long, it'll go long. And this is, you know, and that's part of the boot camp. Yeah, we know two things about the market. It's going to go up. We know three things. It's going to go up, it's going to go down, and it's going to go through time. We don't know when, and we don't know how far. None of that is in our control. Movement of the market, we cannot control it. Doesn't matter how many times you go or you hear anybody, me included, say, oh, this is exactly where I suspect it's going to do. I haven't got a clue. All I'm going on is historically what's happened in the past. Often, that is what happens. I have no idea what's going to happen to this next. This thing could go through the roof for 3 weeks. I've no clue. And it's not down to me, and I've got no control over it. It's down to whether a nuclear missile is launched. It's down to whether Kwasi Kwarteng comes out and says we're going to scrap that mini budget and we're actually going to put everybody's taxes up. I have no idea. I can't control it. And even when Kwasi says something, it's down to the 10 main banks and to their positioning in the market at that time as to whether they want to make money going up or down. Yeah, there's 10 banks that have enough liquidity to push price, i.e. 500 lots in one order short to make this move down 2 ticks. There's very few institutions in the world that can do that. And those are the ones which are manipulating price. So if they want this thing to go down, they will make it go down. When they get to a point where they don't want it to go down anymore, they will push it back up because they can. Imagine if you had the power right now to hit the short button, right, knowing damn well 100% this is going down and that you could do nothing but make money down there. That's what's going on under the hood. What you or I think about where this thing is going to turn is completely irrelevant. And that's the main thing you need to take away from the boot camp is when you understand that you have no control over this, it doesn't matter which of those you hit. What you have to do is hope that the market still does that. And as long as somebody is selling and to get out of their position, they have to buy, we can sell wherever the hell we like or buy wherever the hell we like, because when it comes back down, we'll get out of it. We just don't know when that's going to happen. We don't know when that's going to happen. So what we do is we use indicators that we know historically, when they get to certain points, most of the time they do that. If they do that after I've hit the button, brilliant. If they don't do that after I've hit the button and it keeps going down, I will do that a couple more times because we know that when it gets to this level, if it doesn't turn, normally it will turn there. If it doesn't turn there, when it gets down to there, it's so exhausted it has to turn because otherwise the banks won't make any money. Position trading. We're scaling in the direction we know the market is going to go at some point because the banks have got to do it. That's literally all I do. That's what the banks are doing. This is exactly what the banks and the institutions are doing. They're not hitting the buy button here with a stop loss under there with the possibility of losing 50 grand if it goes that way and making 120 grand if it goes that way. Yeah, the banks at the moment are selling the pound. And until they stop selling the pound, I'm going to do exactly what they're doing, because I know if this thing pushes up, at some point they're going to do that, because that's what they're doing. You can see they're doing it. And until there is and this is why fundamentals are important, until there is a fundamental shift that says that the pound should strengthen because the government or the central bank have intervened and made it so, that will continue to happen. Or the Swiss franc, the Swiss bank has intervened and says they're going to do something different. And this is why we keep an eye on interest rates and inflation, because that is the main driver of currency. It's really simple. It's a simple thing. It's just a market. It's just you've got no control over it, and that's the big thing. If anybody knew watching the bootcamp, you're going to take one thing away from it: the fact that you've got no control over what's going to happen should make you think twice about every indicator and every strategy you ever look at. Question why? Why is it going to happen? Why is it going to turn there? Yeah. David, great analysis, thanks. I'm off to chat 69. Yeah. Be careful of any Russian ladies on there. They're probably spies. Interesting. I'd always been told that FX was not being manipulated like stocks were. Stocks are not manipulated. FX is the most manipulated thing in the world. FX is not. The thing you've got to understand about the Forex market, and this is why I focus on this. Yeah. I dabble in that. I very rarely play with that. I do like these. This is manipulated by liquidity providers, banks. Yeah. The vast majority of transactions that happen in this market are mechanical transactions for hedge funds and for large business. So when something needs to move up or down in here, it's usually because there's been a large hedge placed in the market, or there's a large number of orders that have to be placed. Let me just get rid of this again. It's absolutely relentless this morning. So this is manipulated massively all the time. This and these, okay, are different because oil is a tangible product. Yeah, it is a barrel. The price of oil is a barrel of oil. That's what you pay for a barrel of oil. Gold is a solid metal that has a value and is used in all sorts of things. Yeah. So these are tangible products. So these have a actual physical value attached to them, commodities. Stock indices are an aggregate of the value of multiple companies. Yeah. So the top 30 companies in the Dow, the top 500 in the S&P, the top 100 in the Nasdaq, the top 40 in the DAX. So this is an aggregate of the prices, the values of those companies. The company value is mainly manipulated by the stock price, which is manipulated by the profitability of that company and the assets of that company. So this is also tangible. You can't manipulate a tangible product in the way that you can something that has no tangible value. Yeah, the FX market is a agreement between two currencies as to what will happen when they do a transaction. There's nothing involved in this. There's no product. So these are manipulated by the bank freely because there's nothing holding it down. If Microsoft is trading at $200 a share because its net worth is 2.9 trillion or whatever dollars, you can't say, oh, let's push this up to 220 because Microsoft isn't worth more. It's worth 2.9 trillion. Until their earnings come out and say we're now worth 3.6 trillion, all right, then the shares can go up. So the stock market is much harder to manipulate. It's controlled by the purchasing and selling of sectors of stocks, which is why they moved in tandem. Yeah, they all move together. So the DAX is coming down. The NASDAQ's coming down, the S&P looks the same, the Dow looks the same, because it's buckets, sectors of stocks being sold or bought at the same time, which have an intrinsic value. That intrinsic value will only change if the profitability of the company changes. With FX, as we've seen with the pound, yeah, this can be devalued and revalued by the banks on a whim. You can't drive the stock price of Microsoft down that much in one day unless Microsoft come out and go, we're giving Windows away free for the rest of our life. Boom. Unless Microsoft come out and say something that is going to massively devalue their company, the physical product sitting behind that value, it's not going to get manipulated in any way, shape or form like the Forex market will or can do. It's totally the other way around. FX is manipulated all the time. Stocks are very hard to manipulate because in stocks, you've got people buying and selling a tangible, a product. They're buying and selling actual physical stocks. There's a limited number of stocks available in the market. Yeah. Like Bitcoin, we're constantly making Bitcoin. That's why Bitcoin went nuts. Yeah. The more Bitcoin gets mined, the more out there's more supply, demand, etc. It pushes up. With a stock, there's 200,000 stocks available in X company. Until there's more stock available, that stock price can't really go far, can it? It will go up and down based on the price of the company and what the company's worth, its value, which is what a stock price is. But unless they release more stocks into the market or do a stock split the company in two directions, nothing's going to change. You can't manipulate it. This thing, who says it's worth 83? The banks, because that's what the banks decide they're happy with. This is what price discovery is. This is what balance is. This is an area of balance. The banks were happy to transact at that price. Something's changed. Now the banks aren't happy to transact at that price, but the banks are the ones that moved it there. No one else. They manipulate it wherever they want. Because if they come on and say, I'm going to dump 200,000 lots short, that thing's going down. If a bank says they are going to sell 200,000 shares in Microsoft, right? On the other side, there's someone else buying 200 shares of Microsoft at that price. Does the price change? No, because 200,000 sales, 200,000 purchases, that doesn't affect the price of the stock, the value of the company. But if one bank decides to sell 200,000 of a currency, that will change. So this is why we trade FX, because it's manipulated. With the only way to make money in a market is to buy something at one price and sell it another, or sell it up there and buy it down there. Yeah. So what do we need? Movement. Thank you very much, Mr. Banks. You manipulate it, which gives it movement. That's why we make money. That's why so many people trade FX, because it's manipulated. We want it to be manipulated. We want the market makers to move this thing around, because if they don't move it around, we can't make money. They don't push it up and pull it back down again, and we can't get on board with them. We're stuffed. So yeah, it's the other way around. Banks have been fined in the past decade for manipulating the FX market. Yeah, they will continue to get fined. It's like everything in school, like you get a high school with a load of kids in it. 95% of the kids are going to be good, 5% of them are going to be bad. Those 5% are going to get told off and expelled. 95% of them will be okay. In a bank, on a dealing desk, you've got a load of bankers. Some of those bankers are going to want to do a little bit underhanded. Tell you what, I work for Barclays, you work for HSBC. Next time I hit the buy button on 100,000, I'll let you know. You sell them off, and then I'll buy them back from you. We'll make sure the price is a slight differential, so we'll both make 100 grand along the way. How about that? Totally insider trading, illegal to do. If you're sitting in a bank and you need a new Ferrari, and you can do it in one transaction in an hour, you're going to have a crack at it? And there's nothing you can do about that. And they will get caught, and they do get caught, and they regularly get fined. But the fines are always, like I said, the fines are always smaller than what they make out of the manipulation. It's just the way the world works in the banking sector. Which is why we had this thing in the UK of them dropping the cap on the bankers' salaries. Because we capped the bankers' salaries, yeah, So all the bankers went, oh, screw this, I'm off to Singapore because there's no cap in Singapore. I can work for the same bank doing the same thing in Singapore, but there's no cap. So we removed the cap to try and get all the bankers back into London. But when we put that cap in place on the bankers, not able to do this, that, and the other, what did the banks do? Change the way that they paid the bankers. So they all got whacking great salaries with much smaller commissions. So they had the same amount of money, they just had less commission but bigger salaries because they couldn't put a cap on the salary they were paid. So if I earned 150k as a banker, as a basic salary, and I earned 2.4 million, what they did was they put my salary up to 1.5 million, and I only earned 750k in bonuses. There's always a way around it. It's the banking sector. Money makes money. It's the way of the world. It's the way it has been. Are you going to make a bootcamp from the future for scalping? No. No. Scalping is just, for me, is discretionary. So I don't think you can teach scalping. Scalping's very simple. It's risk reward. You basically trade price action. And this is what this Price Action Toolkit does. It shows you candlestick patterns that typically something will happen like this. This IRB here, when it breaks, typically you go long. Yeah. But it's discretionary. When you take that trade, your stop will typically go under there, but where you get out is discretionary. There's no rule book you can give everybody apart from risk reward, which is very simple. If I take a trade there and I put my risk there, my reward ideally needs to be bigger than my risk, and I need to have a more than 50% strike rate. So scalping is what everybody wants to do because it's simple, but it's the hardest thing to do because all you're doing is you're trading chop in the market. So I don't think you can teach people to scalp. You can teach people a strategy. Market structure is the same on all time frames. The market's a fractal, so what you see on a bigger time frame, you'll see on a smaller time frame. But teaching somebody the psychology of taking 5 losers on the trot in a day and then walking away with a 3% loss, rather than going full tilt, doubling their contract sizes and trying to get that money back, that's what you can't teach, and that's down to the person, the individual. Scalping is all about not going tilt when you get it wrong. Yeah, I took a short this morning trying to get that gap fill. Didn't work out. I haven't tried again. A lot of people will be selling the crap out of this, trying to get this gap fill. Some people might have taken 4 or 5 trades this morning, trying to get, they got in here on that 3-bar reversal. I didn't. They got in on that bearish engulfing. They're probably just about to get stopped out. They got in somewhere down here, trying to get the initial move and got stopped out. I got stopped out once this morning. Some people would have got stopped out 3. You can't teach. You can tell people not to do that, but no matter how many times you teach people not to do it, they're at the button. And after 3 of those, losing 3% of their account, they'll get cross and they'll go in with a much higher percentage of their account risk, and then they'll get stopped out again and lose 5% of their account, and then they'll just go mental and that'll it. But that's why I don't recommend scalping unless you're very experienced, because it's the hardest way to trade. I know one person, really, 2 people, I don't know the other person, but I know of a couple of people that make money full-time scalping. And I've done really well out of it. Last quarter I've done 15k, which is my best quarter ever. But I'm pretty sure if I was doing it with my own money, because I was doing it with prop money, I would have got a completely different result. Andy, I still don't understand Bitcoin. How are these things mined? Just number crunching at the end of the day, isn't it? Yeah. I don't either, to be honest. The whole blockchain thing and stuff, I don't. This is why I don't trade crypto, because you should never trade anything you don't fully understand the mechanics of it. But like I've said quite a few times, at the end of the day, this is now just an index. This is, as far as I'm concerned, linked to the stock market. Look at it, doing the same thing as the stock market. When the stock market goes down, crypto goes down. When the stock market goes up, crypto goes up. Yeah, look here. That upward movement, that accumulation. That upward movement, that accumulation. It's just obviously doing it in a completely different waveform because obviously the volatility is different in each market. But yeah, I kind of understand it. You know, every time there's a transaction, it's all encrypted, and you need a computer to decrypt it, which gives a Bitcoin out or something. And yeah, but you can't mine Bitcoin anymore because energy prices have driven electricity up so much that you can't actually make enough Bitcoin more than you would spend on the currency you're mining. So it's kind of scuppered the crypto market a little bit, the energy crisis, but it'll probably come back. But yeah, I don't know. If you don't understand it, don't trade it. There's enough markets to trade. There's enough instruments to trade in Forex alone that you don't need crypto. Specialize in stuff. Specialize in the FX market, specialize in indices, specialize in commodities, specialize in crypto. If you try and trade everything, you'll get confused to hell. Stick with something and do that, really. Best thing to do. Which is why I don't trade gold, because I'm no good at it. I don't trade it. I can analyze it in the same way as I do everything else, but I just don't seem to make money on gold, so I don't trade it. I've had some really good trades on it. But I've also had some very big losses on it. So, but yeah, you know that after you've done it for a while, won't you? That's the way it works. Right. So there we go. There's a little lesson on how the banks work. I've done that one before. It's important to know. You need to know how things work. If you don't know how things work, you can't trade it. It's like any job. If you want to be a surgeon, you've got to know how to open up a head and cut the brain open. You've got to learn how the brain works before you can put a scalpel anywhere near it. And you need to know how all this stuff works. Otherwise, or rather, yeah, you need to know how this stuff works. But also the thing I say you need to take away is no idea about those three things. And those are the three things that everybody tries to control. We always try and pick the top. We always try and pick the bottom. We always try and jump on the trend. And we always try and time our entries. Those are the three things you cannot do. So stop trying. Right, I'm off. Long one this morning. So I'll be back tomorrow morning, 7:50, same time. News-wise today, just be aware of the news, obviously. This afternoon, we've got Jolts at 3 o'clock. We've got Mester speaking at 2:15, which is probably not going to do a lot, but yeah, Jolts is the only real news we've got. We've got Lagarde speaking as well. So we have got talking heads, and obviously, you know, every talking head has the ability to move the market. But they're unlikely to say anything. MK, so you think I should only focus on position trading? I don't know. Up to you. Go and do the course. It's only 5 videos. They're long. It's 5 days. It's 5 videos basically. But go and watch the videos and decide for yourself if you like it. It's like any strategy. Position trading is the same as any other strategy out there. If you look at a strategy and it makes logical sense to you, yeah, and you can see a benefit or you can see yourself trading that way, go and try it. If you look at it and go, this doesn't make sense to me, I don't get it, it doesn't click, don't do it. It's just another way of doing it. Another way of extracting the money out of the market, which is got its pluses and it's got its minuses. And I don't know you. I don't know whether you can or want to trade in that way. And only you can answer that question. And what I'm saying to you, what I've said to you this morning is all covered in the course. Yeah. To become a successful trader, you have to go and do loads of courses. Mine, anybody's. Do 5 courses, do 10 courses. some of them will twig, some of them won't. There's no one course that you can do that fits everybody. My way of trading is radically different to everybody else's. I'm not the only one that does it, but I trade differently. And it's not my entries, not my strategy, not the reason I get in, the indicators I get in, the way that I trade with multiple positions rather than a single position. That's the bit that's different. And that's why I think it works. So you'll either make sense to you or you'll be going, Christ, this bloke's nuts. Which is fine. You know, as I say, I think a lot of other people are nuts. But it doesn't matter at the end of the day. If you can make money out of the market, that's all we're here for. So if this helps you make money, brilliant. If it doesn't, chuck it away and go and do something else. It's the only advice I can give. So I've done it all. And I've chucked 90% of it away, you know. So if you're trying to be a funded trader, then position trading is not for you. I can tell you that now. Say that. You can position trade on small time frames, but you will get burnt at some point and you will lose your funded account. But if you can position trade for long enough to make money, then yes, you could use position trading on a small account. But funded is all about luck. It's all about whether or not you hit that losing run or that winning run at the right time. If you hit a losing run at the wrong time, when you're going through an evaluation, you'll fail the evaluation. If you hit a winning run, when you do the evaluation, you'll pass your evaluation. So I'll quickly cover this because I've covered it before, but you obviously haven't heard it. With futures, with funded accounts, the way that you work them is your strategy, whatever strategy you run will have a P&L that goes something like that. Yeah. If it's a good profitable strategy, it'll be something like that. Yeah. If you start your evaluation here, you will pass. If you start your evaluation here, you will fail. If you start here, you will pass. If you start here, you will fail. You don't know from here, starting your evaluation, you don't know whether you're going to get a winning or a losing run, whether it will hit the stop, whether it hit the profit. Yeah. And by stop, I mean the daily drawdown limit or the weekly drawdown limit or the account drawdown limit, or it will hit the profit target they've set for you. You don't know which of those is going to happen. Yeah. So the way that you do funded accounts is you just trade normally, and if you hit it, brilliant. If you don't, you do another one. If you hit it, brilliant. If you don't, you do another one. Yeah. Until you do it. And then you get your funded account and you hope that you get another winning run with your funded account. If you don't, you blow it and you go back to square one. And you just rinse and repeat that process because of what I've just said in this session. You have no control over the market. You cannot control which of your trades will win and which of your trades will lose. The market determines which direction it's going to go and when, and your strategy, no matter how good it is, will either win or lose. You don't know when because you've got no control. And this is what the prop firms know, is that no matter how good you are, I am a trader with I haven't got my P&L up. I'm around about a 68% strike rate on my funded account. Yeah. So that means that I've got 32% of my trades that lose. If those 32 happen in the first 2 days of my evaluation, I'm failed. If I get stage 1 passed, stage 2 passed, and get funded, if those 32% hit when I get my funded account, I've failed and I'm back to square one. And I've just spent 20 days getting there. The prop firms know this. The prop firms know that no matter how good you are, how profitable you are, if you've been profitable for 5 years of your life on your own account, yeah, they know damn well that you cannot sustain that profitability for more than 30 days most of the time without having a losing run. A losing run will blow your account. An account blown means a reset fee. A reset fee means they make money. That's the prop firm business model. There is a way to play it. which is what I do. But you're not going to get an account and keep that account for anything more than 30 days. 90 days is the maximum. There's less than 1% of prop firm accounts that are funded survive more than 90 days. It's 0.04% or something. These figures have been published by my Forex funds. Yeah. So even if you can get through the 2 stages of evaluation and get that funded account, the odds of you keeping that funded account for another 2 weeks, which is what you need to keep it for to get paid, are infinitesimally small, less than 1%. So this is why I think you'll find position trading quite eye-opening. But you're going to need your own account to do it. You're going to need some money to do it, which is where everybody falls down, unfortunately, because you need to fund your own account. Otherwise, you're not going to do it with a prop firm. There are ways and means, but it's very hard. Like I said, I put a post in the Telegram group. I did my accounts last week. I spent 5k on prop firms. I think 5,200 or something on prop firm evaluations in the last quarter. Actually, it's dollars. And I drew out just over 20k. So I made just over 15k in profit. So that was my cost of doing business evaluations. That was what I managed to draw out on the accounts I could hold, and that was my profit. But how many evaluations do you think I took in that quarter to pay $5,200 to prop firms? A lot. Because I just have to keep doing them until I get that run. And I don't know when it's coming, so I just have to keep doing evaluations. And I run multiple evaluations at once. And I lose them. I took 2 with my Forex funds last week, 2 new ones. I failed one. I'm on stage 2. I started another one. You just got to keep doing it. And when you get up to 5k in those prop firm accounts, stop trading. Yeah, stop. When you get there, draw that out and then start again. Because you're going to spend that. You spend a couple of grand a month on prop evaluations and you can get up to 5k in a funded. Take it out. Make your 3 grand. Walk away. That's your pay. It's just like taking a trade, yeah? Look at every evaluation as a single trade with a profit target. When you hit your profit target, withdraw the cash. It's the way to do it. Money is an illusion. Hi, Sammy. I missed most of the live room. Have you gone through the euro and pound pairs? Yes. Hours ago. I'm still talking because people were asking really good questions this morning. But yeah, I have. Euro short, pound still short. I've just taken a short on euro Swiss. So yeah, short euro Swiss on that reversal alert there. And I've also got Aussie dollar, US dollar. I've got a short on that as well from this morning. We're just about to get a reversal alert on that as well. So that was the entry I took on that M pattern there, which wasn't a reversal alert, but I took it manually because it was still a nice M pattern. It's just obviously the strength of that move on the news meant that the reversal alert wouldn't trigger until midway down. So I'm in on that as well. So both of those in profit. Euro Swiss and Aussie US. But go and watch the replay. I'm ending the live room in a minute. DR month, time is an illusion. Lunchtime's doubly so. That's very profound. Yeah, lunchtime never lasts as long as the rest of the day, does it? It seems to go very fast. Anyway, watch the replay, yeah. Yeah, go and watch the replay. There's loads of opportunities. If you've got the dashes, there's lots of weeklies which have hit. We're only on Tuesday. Lots of weeklies have hit. We've got 4 hours extensions as well. Euro Swiss being one of them. And there's a few hourlies. So it's a quote from the Hitchhiker's Guide. I haven't watched that for ages. I must watch that again. The original. Shakers. Used to like that. Right, I'm off. I will see you guys tomorrow at 7:50, same time. And obviously I'll let you know what I'm doing with these positions. They've only just started, and Pound US is also starting to come down as well a little bit this morning. So we'll see how we get on with that. But all these pound pairs are off the charts a little bit at the moment. But I think we get some weakness starting to show across the board. So fingers crossed they start to come down. All right, guys. Anything you need, come in the Telegram group. I'll be in there as usual. Otherwise, we'll be back tomorrow morning, 7:50, and we'll have a look at the fallout from the New Zealand dollar tomorrow morning. All right. Have a good one. I'll see you then.